Hey guys, so today was CPI day. I gotta say, I will hand it to the CPI, whatever you want to call them, analysis people. I definitely did not expect to see a year over year at 4.9%. I was pretty confident we would see a 5% or maybe a 5.1%. We did get the month over month I expected at zero point 0.4 and the core CPI at zero point 0.4. Core year over year was 5.5. So kind of interesting day. This is the 15-minute chart here on SPY. So what it shows is obviously CPI came out, and then that was pretty much a big old rocket. It was about 1% up, I believe, at one point. But what ended up happening was we pretty much just gave it all up. So we actually dropped about a total of $5.67 intraday. Just the opening candle or the opening hour, I believe, was like a $3 drop or something like that. So, or $4 drop, I mean. So very, very interesting. So the question would be, did markets not like what they saw? I would have thought that a 4.9% year over year print would have been some pretty strong fuel for the bulls. I would have thought we would have seen a bigger move up, maybe that targeting that like 415 to 417 area. And we did try that at opening, as you can see, but we gave it all back up pretty quickly. So very, very intriguing day. I am very much so interested in what happens next. Tomorrow we do get core PPI and regular PPI month over month with unemployment claims. So the interesting thing about these PPI numbers is last month or last time we got these readings, they were actually negative prints, which showed a very bullish, cool CPI inflation. However, this is going to show, if we go back into the positives like they're estimating, that CPI possibly and inflation definitely is not fixed yet. So tomorrow morning will definitely be some interesting numbers there. So looking at the daily here, basically what happened today is that we came back in and we actually did establish a new supply. So this is where we see a really big imbalance in the market. So this has happened before. It happened back in, I believe, this area back here maybe. It happened down here too. But basically what happens is we, due to the way the price action works, we actually put a supply in below where we close the daily candle. So that shows an incredible imbalance because we should not put a supply in and close higher, and we should not put a demand in and then close lower. So what this tells me is that in this area, there is definitely an imbalance and it will need at some point to be balanced. For me, I believe that is going to be coming back down and establishing a new demand somewhere down here. And we still have these two gaps right here to think about too. So I do see the potential that we could push up to this 415.6 to 416.8 rate, area. But for the most part, I think this is just our range. I mean, if you look back here all the way to March 31st, this 404.4 to 416.8, I mean, really, I guess you could really call it probably 416, has been our range. So this is about $12 range. On a weekly time frame, it's more like a $10 range, 406 right here to this 416. So really, until we break out of this, I don't think we're going to see a whole lot of anything. You can see we are kind of forming a really nice diamond pattern here, which should mean that we could break out into the 420s, or we could potentially come back down to the 405 range. Now, looking at futures here, same thing. This is where it's interesting. We actually put in a really large doji candle. It technically is bullish engulfing, and technically is bullish engulfing of the last 2 days of price action. Now, one interesting thing here is this actually looks like a bull flag to me. You have this nice long post with the flag, and then that could pop us up. One other interesting thing on futures is that we actually, after establishing 41.53 as supply, we immediately turned around and established 41.34 as a demand. So this actually is far more balanced on futures than it is on SPY. It also shows that we are in, once again, a super tight range. We have our broad in 40.74 to 41.91 range, and then we also now have a super tight range right here at this 41.34 to 41.53 area. So I don't have a lot of direction here. This is one of those times where I don't recommend going long on anything just because we have no trend. It is just low volume chop, basically. We did put a nice 96 mil volume as of right now, day in, which is pretty good sizable volume compared. I mean, really, today's volume actually is greater than the last 2 trading days volume. So that's impressive. So I would not be surprised to see that volume immediately come back down tomorrow, though, in a range to come back down either. Now, looking at the VIX here, we have our broadened, big old falling wedge. We are in another falling wedge right here, and we're kind of in a breakout triangle here. This could potentially be a bear flag, which goes with the SPY bull flag that we have right here, which if that's the case, then we're going to see the VIX try to come back down to this 15.08 to really 15.75 area, which should push SPY up to about that 417 to 420 area. Now, one thing to keep in mind here is that you can see we are kind of finding a really nice support area in the 17 range, and that seems to pretty much since April 14th be quite the magnet. Is this really the 17.1 area right here? Now, going over the VIX 1D, not a lot going on here. One interesting thing to note, and now we obviously don't have very many days of data, is we are in a nice downtrend right here since pretty much May 3rd. So this could potentially bring the VIX 1D down, which could bring the markets up, obviously bringing SPY up. Now, we do have this lower support range. Anytime we seem to get near this line, we want to bounce back up, and they're usually pretty sizable bounces too. So we could see the VIX 1D come down in this like 19.9 to really 10.1 area and bounce, and that would bring a big old candle up on the VIX 1D. Now, one other interesting thing here is if you look at the dollar is in a massive downtrend, and it really has been since March 8th. Realistically, what I'm looking for is the fact that all of these sell-offs that have happened on SPY over the last 2 weeks, and when I say sell-offs, I mean the moments where we're having like big intraday drops, like today, a big old almost $6 intraday drop, even though we gained it all back almost by end of day. Tech is not selling off with us. As you can see today, SPY closed up 0.47%, and NASDAQ closed at 1.1%, almost double the range. So to me, until tech sells off, we are not going to have a sustainable sell-off on SPY. Now, one thing that could take tech down would be the dollar regaining strength. Now, you can see pretty much all the way back till the beginning of the year, this, I mean, I would call it 102.55 down to this pretty much 100.99 area has been a massive support area that then leads to a huge breakout in the dollar of regaining strength. If we see the dollar finally break out of this range here, that could bring the markets down with it. Now, the same thing goes perfectly here with the 10-year. You can see actually today's candle, Wednesday, May 10th, we came up, we perfectly hit this resistance line and then dumped. So same thing, we're in a massive consolidation of this 3.306% to 3.607%. So really until we break out of this range and we see the 10-year go up and the dollar go up, we're kind of just stuck right now. Now, someone asked me yesterday about the diamond and what I thought about it and how I got my levels. So if you zoom out here, if you go back to the low on March 10th, and then I'm now using today's low of May 10th. So actually that's exactly 2 months apart. And I use this as my support line, and then I project my resistance line onto the highest point, which is right here on the March 24th. Now, granted, yes, there are points back here, but this is a short turn. I mean, yes, I could move it out. And if I do that, actually, it does perfectly line up with these two candles. So that might actually be the true resistance of this potential diamond. Now, the other thing I do here is I use my highest point, which is April 14th and May 6th. I use this as my resistance line, and then I project that down here at my lowest point, which is right here on May 18th. Now, I could actually, really, if I wanted to, I mean, I could project this all the way down here to there, and you can have a kind of double diamond pattern going here. So that's actually something that if we lose this diamond here, we could come in here and we actually could come down into this area. So for me, what I'm watching here is that once we lose this diamond here, we're going to try to either break back into really this 23,000 area, or we're going to try to push over 30K again. Now, we will be watching this closely after this consolidation. It's going to make a move. When this move happens, it could bring the dollar and the 10-year and the markets with it, or it could just be the premonition of what's going to happen. So I hope you guys had a good day trading today. Today was a much, much better trading day. I struggled in the morning. I actually did a really interesting analysis the last month, and interestingly enough, over the last just 3 weeks alone, had I not traded opening hour, I would have saved myself $2,500 in profits. That's the difference of trading for not trading just 1 hour of the day. Now, I love trading opening hour because it's very volatile. You can make some nice wins very quickly. But the biggest thing I noticed is that my win rate is not great during opening hour. It's actually the same reason why I don't usually trade power hour, just because I feel like the technicals of power hour doesn't suit my trading. So I'm definitely going to be making that adjustment and looking forward to that. But overall, today was a great day. Definitely had a rough morning, but man, we really killed it with I hit 12 in a row at one point after the rough morning, and we're now back at really nice profits for the week. So, all right, hope you guys have a good night, and I will see you guys tomorrow.